Hey guys, welcome back to the channel. It's me, Adam. You're watching Steady Invest, and in this video, we're going to be talking about two high-growth Canadian names. The first being the Very Good Food Company, ticker symbol VRY, and they trade on the Toronto Venture Exchange, or the TSXV, as well as we're going to be talking about the SCORE stock, ticker symbol SCR, and it trades on the Toronto Stock Exchange as well as the NASDAQ. Both are well off their 52-week high. The SCORE, when all the hyper-growth stocks were at their peak back in mid-February, the SCORE was trading at 53 Canadian dollars, and now we are 60% from our all-time highs. And we don't see the all-time chart on Google for the Very Good Food Company because they only started trading on the Venture Exchange in March. Before that, they were on the Canadian National Exchange when they first debuted trading last summer. So if we look at TradingView, you can see that the all-time high was back in December of last year at about $9.37. And right now, basically, we're trading at half of that at $4.56. But that's just what growth stocks do in the short term. They're very volatile. But the idea is if you're in a good fundamental company, in the long term, you should see outsized gains. Their current market cap is $442 million in Canadian, as well as in the SCORE, $1.04 billion. We don't see any major news as well between either of these stocks. When it comes to the SCORE, we are looking for legislation news when it comes to sports betting within the States and through Canada. And it's anyone's guess when that may happen, but that's the long-term growth catalyst for the SCORE. And when it comes to the Very Good Food Company, we need to see continued growth and that they're expanding and that they're becoming profitable. So when we look at the candlesticks, so it IPO'd last June, and then it traded from anywhere from $1 to $1.70 for a few months, and then the stock got discovered by Financial Education. It was pumped up from just under $2 to all the way to $9 within a few months. And since then, we've seen a slow bleed in the stock price with a support area of about $3.50 to $4.60 or so, which is right where we are right now. And we do see that there was buying pressure a few weeks ago when the price hit a low of about $3.55. We're also currently under the 250-day moving average. So it's not really the cleanest of charts. I'm not really seeing any imminent breakout or setups, but again, with growth stocks, we can never really time them. But I do like this $3.55 area as an area of interest because we did see that support earlier. So when it comes to an entry point or adding to your position, that may not be the worst of spots to consider, as we may see a rebound in the price, and if we don't, then we can continue dollar cost averaging from there. As well, looking at the SCORE stock in Canadian dollars, this one got really beat down after the reverse split. So similar situation, we're knocked down from those all-time highs. We were under the 200 moving day average for a week or two. We did have this jolt up last week, jumping from that $16 range back into the 20s again. That may have been the bottom. We may see those prices again. We'll just have to see. But if we do go under that $20 mark again, anywhere from $13 if it goes that low again up until 19. Again, not a bad area to start or to add to your position. Both these stocks are very promising in the long term, but again, in the short term, there isn't very much momentum in these kind of names, as well as any catalyst that could boost the stock price in the short term. And this has been happening with a lot of growth stocks recently, and this just gives us more time and opportunity to add to our positions, especially if we see the prices go really low one day. As Meet Kevin says, never squander a red day. Those painful days are often the best times to be buying. And that's all for my video. Thank you very much for watching. If you enjoyed it, please hit that like button, subscribe to the channel, and I'll see you guys in the next one.